Chris Vermeulen from the Technical Traders.com returns today to talk about silver and what might shape up its short-term price action in 2022. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Chris Vermeulen from the TechnicalTraders.com. Welcome back to Metal Money. How are you doing?
I'm great. How are you?
I'm doing fine. Getting everything off to a good start this new year. Hope everything's going great for you as well at Technical Traders. You know, last time we spoke back in October of 2021, we noticed how silver was struggling to break through that 50-day moving average, much less hold it. And we kind of still see this today where it'll peak through above that 50-day for a short time, and then it'll settle back down and dip below it. What does this tell you as a trader, what the short-term sentiment for silver may be?
Yeah, I mean, the 50-day moving average is a pretty critical line on the chart. When you look at the daily chart of silver, which I have pulled up here, you can see on this chart, there's usually, you know, when you break through the 50-day from either direction, it's usually kind of a trend change. And so we've got these really critical major kind of turning points. Sometimes it'll act as resistance short term, but you'll usually hold above it. Usually price is trading above it, breaks below it, gets stuck underneath it, and it flips and flops. And if we were to zoom into the most recent price action here, you can see how we were under it for a while. We did get back above it. Back when you and I were speaking before, we ended up getting back above it and fell back below it. And now we're stuck underneath this level again. So it's definitely a bit of a resistance zone. I do feel like silver in the precious metals sector in general are still trying to base. They're at a really critical point, which they've been at this since really August. They've really been flirting with these lows. But right now, in a short-term basis, you know, silver's at resistance. It still has, it really needs to start to break above this kind of, you know, 2350 area, I think, to the upside. That'll give it a higher low. It'll give it a higher high. And that's the definition of a new uptrend. And so if it was to do that and break 2350, you know, it looks like it'll be off to the races for another run. And I think it could go right up to 2450 or 25 very quickly. But right now, silver and precious metals miners as well are really just pretty messy charts. They've been all over the place. They're chopping around, and there isn't a real clear direction in the short term right now.
Okay, thank you for that, Chris. Appreciate it. I applied the Fibonacci high-low retracement to the past run-ups to the peaks of the last bull market between 2001 to 2011 on a weekly time frame. Now, after each new peak, it was common for the price to retrace to the 50% or even 61.8% levels after that. However, for the trough to peak between March to September in 2020, the prices have only retraced to the 38.2% level. In your opinion, Chris, could this mean that there's a good chance that we could see silver prices go even lower before the next leg of the bull market resumes?
Yeah, I mean, it's possible. If we were to pull up the Fibonacci retracements on this weekly chart of silver, and we go back to these lows back in early 2000, we go to that 2011 top and just kind of carry those retracements forward, you can see we had this full kind of major cycle to the upside. And then depending on where you draw these lines, typically you're going to see it come down to the 0.38 or the 3.5. Sometimes it'll come down to the 0.61. In this case, it kind of flirted around the 50% retracement based off these lows here. And we're kind of in that very similar scenario to where we are right now. If we were to take the COVID lows, let me just grab that tool again. If we were to take the lows from 2020 and carry that up to these highs, we are more or less flirting around with the same spot between the 0.38, the 0.5. So we are in a very similar scenario that we had back over here. And this should act this is going to be a very big turning point, I think, for the precious metals market. They are primed and ready to have a very big move, whether it's going to break down and correct and potentially take another year or two to build a new base. That is one scenario. I think it could drop very quickly down to the $17, maybe even $16 area. But if it does find support here, then we're actually going to go up to about $39 an ounce very quickly. That's what the Fibonacci extension based on this bull flag pattern is pointing to. So we are definitely at a very unique scenario in terms of the price action that's going on, the type of pullback, very similar to what we saw over here. Depending on where you draw these extensions, you were showing it was at a 0.661 retracement. Well, both of them would be roughly the same if they were drawn off the same levels. So these are very similar setups, except for the difference here is this was at the end of a major bull market for precious metals. And this one is, I think, what is the beginning of another bull market cycle. And so I do feel like there's going to be the upside, but short term, there could be some pain. This still could come down into this lower zone here and really spook people out who are very short-sighted or very short-term trading silver. But I do feel like longer term, we are going to see precious metals go quite a bit higher.
Okay, thanks again for that, Chris. Some technical analysts have pointed out that gold and silver has showed in the past 2 decades that they have a 8-year cycle low, like back in 2000, 2008, the great financial crisis, and 2016. And they are projecting that the next low is in 2024 or 2024-ish. And before that happens, both metals will probably reach a new high, just as you kind of touched on there. Do you factor this observation of an 8-year cycle low in precious metals in your longer-term technical analysis?
I don't factor it into any positions or trading. I like to look at it and get an idea for what's going on. But major cycles like this are really tough to time. It can be off a half a year, many months, sometimes even a year or two. So I don't use it actually for timing. It is interesting to see where those cycles go. I do have shorter term cycles pointing to actually a low here in another month or two for precious metals. And then it's going to have another shorter term cycle that actually carries it over to 2024. So there's very good potential. Metals are bottoming here, and we're going to see another big push up and move to the upside. Now, based on this pattern for silver, it's not pointing to new highs. It's pointing to roughly $39. But here's the kicker with that is if we do get up to this $39 an ounce level, we've most likely we'll also get one of those euphoric blow-off moves. At the end of a cycle, you can get one of these major moves here where price just goes absolutely ballistic and goes straight up, and it can blow past the target. This area right here was actually a target based on the previous pattern, but because it was the end of a cycle and we have that euphoric phase, it can push prices into a kind of a bubble state and create these massive moves. So hopefully we're going to see $39 an ounce. If we get into one of those euphoric stages, that would be a very quick spike to hit new highs and then roll over. And I think all that can happen before 2024. Now, just keep in mind, this is technical analysis. I'm not predicting or like forecasting saying this is where it's going to go. As a technical trader, we follow price. So if I'm dead wrong, it really doesn't matter because what we're doing is we're following price as it unfolds day by day. We don't just put a big bet on expecting higher prices. And that's where I think a lot of people get kind of thrown off with a lot of analysis online. They say, oh, I'm saying 39. So they get into a huge position and then the market could drop down to 18 or $16 and shake them out, and then it potentially goes higher later. So I just want to make sure people understand. I'm not saying it's going there right now. You really have to follow price and adjust your trading as the market unfolds there.
Chris, when we take a look at the silver daily charts, we do see a lot of touches at that $22 price point. Is there any significance as to why all these touches at 22?
We've definitely seen a lot of these. The $22 seem to act as support. I think one of the main reasons is simply because when we initially had this huge sell-off, it came down and tagged that area. So from a technical standpoint, traders going forward will say, well, this is a pretty major low. It's going to either act as support and quickly bounce off that level, or it's going to break down and change the trend. And so every time it gets down here, there's people putting on a bet saying, I'm buying it right at support. If it fails, I'm just going to get out of it really quickly. And so people get in, it becomes a self-fulfilling prophecy, and then people get committed and you can get these big moves. So each time it gets down into this area, we've got bargain hunters saying, I'm jumping in to add to my position or to play a bounce. And if it breaks down from there, you're buying it right at support. So you can get out of that trade very quickly with a small loss. We have come down and pierced this level, occasionally on these spikes. It does recover within a day. So that is a pretty important sign. It's not just trading isn't about a one-day spike. You really need to see some confirmation for it to hold. And so that is, I think, the reason why we're seeing 22 act as that. It's a technical support level. Believe it or not, a lot of big money traders, investors, even if they say they're fundamentals, they still look at the charts and they use a lot of technicals, because technicals really give you a lot of insight of when to get in, when to trim positions. So that's why that is acting as a support zone. Right now, we're kind of stuck between 22 and more or less, this 2350. If we can break 2350, I think we're going back up to see these recent highs going forward. But 22 is going to be very critical. If we ever break that and hold below it, especially on a weekly close, it could be a very big start of a correction. And believe it or not, the gold and silver miners are not looking that healthy. In fact, if we were to look at the GDXJ, and the reason I bring it up, GDXJ is actually, it's holding its ground fairly well. But when we look at silver, like SIL or SILJ, we have silver miners kind of flirting down here as well, just trying to build a base. Everything right now in the precious metals market is just in limbo. It's at a major kind of support level, trying to get some traction. Whichever way these break is going to be a pretty big move. So hopefully we're going to see the market break to the upside eventually. There is a pretty interesting chart that I came across a while ago. I don't have it here, but it's really, if you were to look at the price action of bonds, like the 20-year Treasury bond back in 2008 during the low, the bubble pop in bonds and how it burst and faded down, you could overlay that chart with what we've seen in 2020 to now, and they're almost identical. And it actually, when we saw this happen in 2008, precious metals went ballistic and took off. So there's that other really interesting aspect that money might be starting to get positioned into precious metals later this year, and we could see a repeat of that going forward. So it's pretty interesting when you look at it from that perspective as well.
Chris, as we do move deeper into Q1 of 2022, from a technical trader's perspective, what short-term numbers would you say traders are looking at as far as the support levels and resistance levels for Q1 in 2022?
All right, so if we take a look at gold, it really depends on your time frame. If you're a short-term trader, you'll be looking at a very different kind of setup than a longer term. But right now for gold, you could argue here we actually have a series of fairly clear standout higher lows. We do have higher highs. We have resistance right across here. And if we're looking at this little internal pattern, this looks like a little bull flag that is primed and ready to pop up and test this high over here. So, we really are kind of looking at whatever this high was over here, which is around 1840 or 1830. If that is broken, I think we're going to see it go very quickly up to this 1860, 1870 area. If you're looking short term to the downside, I'd be very leery if we get below 1780, somewhere below this low. That could start to put the market back into a bit longer of a correction. But when you look at this chart of gold, and this is the same for silver and silver miners and gold miners, it's a pretty ugly chart. You've got huge swings, very sharp reversals. These are kind of V-shaped sell-offs and recoveries. They are extremely difficult to trade. A trend doesn't change really in 2 bars. It might from a very short-term standpoint, but in order to actually take action and trade it, the trend changes, and then by the time it's actually confirmed, 2 days later, it's recovered right again. And so this type of noise I typically like to steer clear of. And we're still in this. We've got big whipsaw price action in here. It doesn't look like much, but it's a lot of chop in the gold and silver in miners market. So I would just be very aware that this is a market you're going to get chopped up. It's more of if you're a long-term investor, I think we're sitting very pretty long-term. Short-term traders, we're on this verge of getting chopped up. But if we break out of this range here to the upside, we're going up to this next level. And then from there, it'll probably build a platform to potentially go to the next level. and so on and so forth. So that's kind of where I think gold, how I look at gold here. If we take a look at silver real quick, we talked about this. It's actually the 2350. If it breaks, above 2350, I think we're heading up back to these highs over here. And if it starts to break down below this low, or if it gets back down to 22, I think we're going to see buyers step back in. We're going to see a lot of volume, and it could act as a support level. But if we actually start to confirm and close below that for any length of time, more than a day or two, we could see a big drop in price. So I just be very aware. If it drops to 2022, it could be a good buying opportunity for a bounce, potentially a bottom play. But again, it's very noisy charts. Tough to trade these.
Chris Vermeulen from the technicaltraders.com. We appreciate the time you've given, and I hope we can do this again soon.
Hey, thanks, Patrick. Always a pleasure. Take care.
That was Chris Vermeulen from the technicaltraders.com sharing his short-term views on silver in 2022. As always, please leave your thoughts in the comment section below, and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.